Real mortgage questions. AI answers. One broker who tells you what it actually means. I'm Edward Brady, a chartered financial analyst and broker at eXp Realty. Opinions are my own and not that of eXp Realty, its management or staff. This is Mortgage Questions. Let's get into it.
What are the standard ratios that need to qualify for? What starts to raise your concern also?
There's a front end ratio, typically is what we call your house ratio. So this is depending on how much debt you carry to how much income you make. That's your DTI. The first one is how much house you can qualify for. And then we look at now at what's called a back ratio, is how much house plus your extra debts that you carry on your credit report. And then we would have to take into consideration that you're not taking on too much debt. So for an example, conventional loans typically like to see 50% debt to income back end ratio. So you could take a 45% house ratio, but that 5% plus or minus compensating factors is where we could stretch out, where you could take on an extra 5% of debt. FHA loans, a beautiful benefit of that is that you could take on a little bit more leverage and go up to 56%. So it's with compensating factors where we'll run it through and see what our automated systems will give you. But typically 50%, 40%. Now that's what people see is what we qualify for.
I just want to clarify that. You're saying 40 or 50% of their income on a monthly basis is loan payment? Is that what it is?
Loan, house payment, and your debts. So that's the total.
Oh, so everything, 40 to 50%.
Correct.
Wow, it's not the old 30% anymore, huh?
No, it's, I guess, increased a little bit. Things have gotten a little more expensive. But typically it would be the house payment you're looking at. This is dependent on loan scenarios, loan products, but you're going to see a lot of anywhere a range of 45% in the front end. And then for the back end, conventionals typically with compensating factors around 50%. Same with FHAs around 56%. And then when you're getting into maybe portfolio loans, non-QM loans, they're going to be a little bit tighter at that 43 to 45%. So it's not anywhere from 45 to 50%. So you're not going to see a whole lot of wiggle room on some of these specialty products. And your front end is going to typically be tighter at 43%. But it always just depends on what the program is and what those ratios are is going to be correlated to that. But that's a qualifying lens you're looking at. What I really care about is a simple test. Basically, after the payment of whatever you're trying to qualify for, can you still fund your life? And what's that affordability aspect? So we're looking at how are we building it with your lifestyle based off what reserves we have left over, and is paying it faster, smarter than just putting a higher down payment, have a lower monthly payment. Is that a better strategy than putting the minimum down, maybe taking on a little bit of a higher payment, or having maybe that mortgage insurance now, but giving you that cushion and affordability to service other parts of your life and your lifestyle.
Okay, that makes sense. So when buyers are told what their estimated payment is, whatever they're going on Zillow or Redfin or whatever, what's the simplest way you can teach somebody to ballpark the real monthly payment before talking to a lender? Is there any online calculators that you recommend using or anything?
Yes, I have my own set of calculators that we could also probably link on here in the descriptions too. I could send you, but I always say there's so many rules of thumbs. It just depends on, I always take it back to, I'm only one person of your wealth team. A great person you want to have is a great realtor like yourself, have a great financial advisor put into place, CPA, and later down the line, having that estate attorney. But having that financial advisor will really help you understand maybe what ratios you need to be at, whether it's 20, 60, 20, maybe it needs to be 30, 50, 20, or whatever it is, to know how much of your discretionary spend versus how much of your necessity needs to be put into these buckets and what payment range you want to stay at. So there's always that whatever the financial advisor wants to work with you to really focus on your lifestyle goals. And then there's what I can do to help really max qualify you, but we want to make sure that it's going in harmony with what your financial advisor is helping plan for you. So we're making sure that we're not just max approving you because we can. It's really aligning with whatever they're saying is within those buckets they're putting for you. There's no real number. It's always, I could say one thing, but maybe your lifestyle and your financial advisor is setting you up differently. So we always want to work in harmony and together to get you to maybe not maximize that 45%. Maybe we need to go a little bit less, 40%. Or if you want to be super conservative, we match it to whatever your financial advisor is. So it always just depends on that.
I
Yes.
guess what I was really looking for is, okay, we got this calculator straight. It has the mortgage payment, maybe it estimates the PMI or the insurance, the taxes. But what do people usually forget when they're calculating? How much is that payment going to be?
Gotcha. So just so I understand that correctly, a calculator will just compute that qualification number.
Right.
I think a lot of the times the mortgage calculators don't look at what I try to look at is that cash flow. So that safety nets, those liquidities, and maybe what returns you're trying to get from purchasing. Calculator is a very black and white tool. Most of the time is how they're set up just to see what you're qualified for. What we want to make sure is that we're not missing the strategy, how much we're cushioning for actual reality of lifestyle, of other milestones in your life.
So I think I'm just going to paraphrase. I think you're almost answering the next question, which is how can the calculators mislead people? And I think what you're saying is, look, it's going to give you a black and white number, but you still have to account for the other things in your life.
Exactly.